Hi everyone, it's Tom Gentile. Welcome to Tom's Trading Room. It is Friday, October 16th, 2015, and I'm going to cover the money calendar. I'm going to talk about stocks, bonds, currencies, commodities, and we'll end with upcoming earnings. So the chart you see in front of you here, I'm looking out over the 19th through the 23rd, still looking pretty green. When we look at 250 optionable stocks, the top 250, we're looking at those that have patterns going back 10 years that are 90% or better to the bullish or bearish side. We are seeing on Monday 31 of those 250 stocks that have patterns to the upside, 81% upside, 19% to the downside. On Tuesday, we have 30 trades. Wednesday, 34. Thursday, 38. And Friday, we have 46 trades where it looks like we're leaning toward the 90% area when we get to Friday in terms of the number of bulls to number of bears. So while it looks really good seasonally going forward, let me show you something that's a little bit conflicting right now. So if I pop on over to the next chart I want to show you, that would be what's happening in the overall market. So in the overall market, you can see here, this is the stock chart for SPY, right, the S&P 500. And what you can see here is we had a darknet signal. We talked about this a couple weeks ago at the end of September, and I was talking about the buying, the buy signals and the overdue buying binge that should be happening in the markets. Well, we got it. And we see that move to the upside. Well, earlier this week, we did get a sell signal in the S&P. Now, that doesn't necessarily mean that the markets are poised to go down, but what it means is this contrarian buy signal is over. I might also point out to you that the 200-day moving average is just above the highs of today, sitting around 206. So while we did see a 12-point move in the S&P, which is equal to a 120-point move in the S&P 500, and equal to about a 1,200-point move in the Dow, we may start seeing resistance cropping up really soon. That's at the S&P. Let's take a look at a couple other ones here. So, bond market. All right, TLT, the bond market, really isn't giving us anything. The last signal we had in Darknet was way back here at the end of July. We've seen nothing in terms of channel collisions happening with TLT. Now, TLT is the bond, so what we typically see is when this particular asset is going up, the stock market's going down. It's been very conflicting for the month of October as it's been gyrating back and forth as our stock market has headed higher. So other than the fact that it seems to be tightening up in a triangle formation, there really is no basis seasonally or technically for a move to the bullish side or the bearish side. All right, let's move on to currencies. And for currencies, we're going to look at the Eurodollar. I'm looking at FXE. And this is a 60-day chart of FXE, and the same thing's happening here. We've got these higher lows happening, and we've got these lower highs happening. Consolidation, is it possible that we might see that extended run downward on FXE? Well, remember, FXE is a risk-on commodity, which means if the stock market is going to move up, then FXE or the Eurodollar should move up along with it. Now, we're starting to see the Eurodollar break down a little bit. Is this a sign that stocks, the up run in stocks, may be over for now? Hey, we'll find out more than likely within the next 2 weeks. Finally, let's take a look at crude oil. So the symbol I'm looking at is USO, a 60-day chart of crude, and you can see here we did get a rebuy signal back here on crude with the price just below 16. And look what ended up happening. After months of moving sideways, we now see crude oil has finally given a sell signal, which really basically means now that I would not want to be long crude or the energy markets, at least until we see either a retest of the lows back in August or some sort of downward pressure. Latest chance that I would change my mind on that before then would be probably around February when we start getting seasonally bullish in the energy markets. All right, finally, let's take a look at earnings. We got earnings coming out next week. We're in the thick of things with earnings with IBM, Chipotle, UTX, Boeing, Amazon, 3M, United, Union Pacific, Google, RTN, And those are the stocks that we see happening over the next week. Apple reports earnings on the 27th. We'll wait until next week to take a closer look at it. However, there are many more earnings out there reporting than the ones you see here. These 9 that you see on my screen are the top 9s that I look at in terms of price, number 1, in terms of liquidity, number 2, and also volatility. So, before I let you go, one more thing. Last week, we were discussing Netflix as a potential earnings trade. All right, so Netflix did report earnings on Thursday. And so I want to let you know, for those of you that saw the patterns, and we discussed a bullish pattern last week, and we discussed a potential bullish pattern. We also discussed that the biggest probability that we saw was a probability of premium dropping. Well, premium dropped quite a bit then, and coming into the earnings cycle for Netflix, option traders were looking for a 15% move in the stock, up or down. So, remember last week when I said that these options were meant to be sold and that potentially put credit spreads might make sense? Well, options, as we all know here in our trading room, can help us determine more than likely where that price is likely to go. Not up or down, but by what magnitude. And in the case of high volatility, selling options premium outside of what we call the blast zone definitely worked this week for Netflix. Okay, that does it for this week. For more information on stocks, options, and all the details, you can visit us here at www.tomsoptiontools.com. Have a great week.